Wait, right?
Start.
Very good morning to all the viewers. I'm Hira Dadia. Overall, if you go to see, it's going to be an interesting day of trade today because clearly it is the weekly expiry as well. A lot's happening in global markets, as well as if you see in terms of Nifty, yesterday's session we closed below the 17,100, below 17,000 levels already. Joining us on the show in terms of what's in store today, we have Nilesh Jain, Head AVP Technical and Derivative Research at Centrum Broking. Nilesh, good morning and welcome to the show.
Very good morning to you, Jain.
Nilesh, my first question coming to you is clearly, yesterday's session, Nifty has formed a long bearish candle on the daily charts as well, which is clearly indicating that bulls are actually unable to sustain any kind of gains that are coming in. Uh, Yesterday's session as well, we've ended lower. Today we have the weekly expiry as well, but the anticipation was that probably we could see closing levels between the range of 17,100 to 17,200. That's what the street was estimating. What's the sense that you pick up, taking into consideration the global cues as well?
If you look at the overall structure, Nifty has no doubt given a structural breakdown. And yesterday, it should have defended the 17,000 mark, but it couldn't do that. Now, if you look at the overall structure, which has turned slightly on a negative side, it has already reached its crucial support zone of 17,000, which was acting as a psychological support zone. Now, going forward, on the lower side, the previous swing low that we saw of near about 16,750 in the month of September 2022, that may get tested once again. So we need to wait and watch out for the sustainability above 17,000. Even if you look at the derivative data of the weekly expiry expiring today, that shows that the band which was earlier at 17,000 to 17,200 has now shifted on the lower side to 16,800 to 17,000. So that's the 200-point trading range on immediate basis. For the day, we expect Nifty to oscillate in the range of 16,900 to 17,050. Any pullback, if at all we see, that may get sold into. On the higher side, if you look at the structure in last couple of trading sessions, for the sixth straight session, for the fifth straight session, we saw a negative closing for the Nifty index, and due to which Nifty has gone into slightly oversold territory. So a pullback is very much on the card, but I would rather wait for a pullback to sell as a selling opportunity. The structure is slightly turned negative on a short-term time frame.
Right. So with this, if you see the volatility, that's quoting near the highest levels of the last 28 sessions. So do you think that probably could give an edge to the bears in the market? Because with that, if you see the VIX as well, it's still comfortable below 18 though.
You are right, but if you look at the major structure, which was earlier on a negative side, has now breached 1611 on a higher side. So that was acting as an immediate resistance zone. So that is not a good sign. And in this week itself, it has surged more than 21%. And in the US market also, we saw jump of near about 30 to 35% in the VIX. So across the global market, we are witnessing a rising in the volatility. So that is certainly not a good sign. It needs to cool down below 14 levels for any sort of comfort for the bulls. But as of now, it is not in the comfort zone, and it is basically indicating more, I would say, further weakness going forward.
Right. So, Nilesh, we've been tracking the PCR pretty closely. And if you see the PCR OI over the last couple of trading sessions, it's clearly implying, a pullback, but we've not seen that major pullback which is sustainable, right? So from a closing basis, what's the anticipation? What levels could be tracked from a closing perspective?
See, two important points. If you have mentioned about put call ratio for the Nifty, which has fallen from 0.69 to 0.67 yesterday. And if you look at the overall put call ratio, it is very much on the lower side. It has gone into extremely oversold territory. Even if you look at the put call ratio for the Bank Nifty, which has fallen from 0.59 to 0.53. So these are the lowest level we have seen in the recent time. And that basically indicates a pullback, which was very much due on the card, but we haven't seen that yet. Even if you look at the FI's long position in the index, which has fallen to its lowest level in last 6 months to 12%. that is the long position in the index from the FIIs. So these are the data basically which are indicating that markets are no doubt in extremely oversold territory, and pullback is very much awaited. But I would rather wait for a pullback to sell as a selling opportunity, as I mentioned earlier, because the major structure has turned slightly on a negative side. So rather than playing and taking contra bet, I would rather wait for any sort of pullback as a selling opportunity.
Right. Another point that I want to discuss with you is in terms of the FIs. They've actually turned net buyers on the SSF yesterday as well. What indication is that giving us?
That is although the data slightly coming on slightly on a positive side, but if you look at the FIS long position in the index, which is not a good sign, which is they have sold at extremely at lowest level. So long position is extremely at the lowest level from the FIS in the index. So that basically is indicating that they have gone extremely, in a selling spree in our Indian equity market. But from here, the risk and reward is definitely looking favorable. And earlier we saw in the month of August when the long position fell to 13%, and we have seen a smart recovery and a strong pullback in the market. So that's quite possible, but for that, I would rather wait for Nifty and Bank Nifty to break important levels. So as far as levels are concerned, I would rather wait for in the Nifty index. It should breach 17,500 mark on the higher side for any sort of trend reversal. And for the Bank Nifty, it needs to take out 40,000 level decisively to call it as short-term base formation and bottom.
Right. So overall, if you can just repeat in terms of the banking side as well, how are you seeing to play out in today's session? Because clearly, if you go to see the PSU Bank Index, which has been the worst performer so far as well. So today's perspective, if we have to see a pullback rally, how important will the participation need to be with regards to Bank Nifty? And if that is the case, where do we find the resistance and in what level should we be tracking?
Right. So first, if you look at the daily time frame chart for the Bank Nifty index, uh, uh, yesterday for the fifth session, we have seen underperformance in the Bank Nifty leading the fall. So that is certainly not a positive sign. Yesterday, it also broke its crucial support zone of 200-day moving average, which is placed at 39,560. So that will be the next important levels on a higher side that needs to be taken off for any sort of short-term pullback to continue. On immediate basis, I believe this fall is likely to extend towards 38,600 to 38,400. If at all any pullback, if we see in today's trading session towards 39,200 to 39,400, that could be a good shorting opportunity with a stop loss above 40,000. Because I'll turn positive only if Bank Nifty takes out 40,000 on the higher side. Then the short position needs to be squared off, and post then we can expect a short covering move. But for the day, purely from expiry point of view, we are likely to witness huge amount of volatility, and the range for the day for the Bank Nifty comes around 38,800 to 39,300. So that could be 500-point trading Bank Nifty.
Right. Another question that I have is that if we are expected to see a pullback rally in the markets, a lot of participation from the heavyweights is what is going to be needed and not from the broader markets, right? So if someone is looking straight from a today's perspective, do you think it's the large caps that need to be looked at in an anticipation that the Nifty will need support from heavyweights before the broader markets actually gain confidence?
If you look at yesterday's session, somewhere the broader markets were the outperformer in the initial hour, but towards the closing hour, we saw some selling pressure in that space as well. You have rightly mentioned the large cap needs to participate, and they need to provide some sort of a support. But on the contrary, we have seen a structural breakdown in the HFC twin, so that is quite a bit of concern. We need to wait and watch out for counters like Reliance, HDFC Twins. So these are the counters which needs to provide support, but which seems slightly missing on immediate basis. So we are expecting some sort of selling pressure in the large cap space. So overall, I believe any pullback, as I mentioned, may get sold into because of these particular counters which are looking slightly negative on the chart.
Right. So, Nilesh, basis this, what are the stocks where you see some bit of participation coming in to exceed Nifty close, probably in that 17,100 to 17,200 kind of a range? Which stocks would you bet on?
I would like to play slightly on a safer side.
Hmm.
So the counters like OMC stocks, due to the sharp sell-off in the Brent crude that we have seen, so that correction is probably is likely to support the OMC stocks. So I'm eyeing on IOC, BPCL, and HPCL, and specifically IOC, which is looking extremely positive on the chart. And yesterday we have seen some sort of a build-up on the long side as well. So on the higher side, we expect this momentum to continue towards 80 and 81 on immediate basis. The stop loss should be placed below 77. And also BPCL is also looking positive for 342, 345 sort of levels. Stop loss should be placed at 322. So overall, it is better to stick to the names which are slightly recession proof, I would say. And also due to the market volatility, these are the counters which are not getting affected that much. So watch out for this specific counter. And purely from a short covering play, I might go long in the financials purely from a pullback perspective.
Right. And very lastly, do you have any view with regards to HDFC Bank, SBI? Because both these counters did see long positions that were taken, as well as an Asian Paints as well. How are you viewing these stocks?
So one more name that I forgot to add, as you have highlighted, Asian Paint. In fact, yesterday we have seen a good participation in this particular counter. A positive action was seen in spite of the weakness, and that basically that particular counter is getting benefit due to the fall in crude oil prices. So Asian Paint, yes, any decline could be a good buying opportunity with a stop loss below 2780. Upside is open for 2900 to 2950. So that is I would like to play on a long side. And apart from that, HDFC Bank and SBI, purely from a long-term perspective, it's a good bet to add in this kind of corrections, not from a trading point of view, because from trading point of view, the structure looks slightly on a weaker side. So for SBI, I would suggest to go long for the upside target of 550 to 600 for next 6 to 8 month time frame, and stop loss should be placed below 490. And if somebody is looking from a trading point of view, I would rather advise to stay away from the financial as of now.
Right. And one last stock I want to take, which is a heavyweight, which holds maximum in terms of weightage, is the Reliance Industries. Yesterday, it hit a 52-week low as well. And there was some bit of short covering that did come in yesterday's session on the Reliance Industries. How are you expecting it to play in today's session? What is data and charts indicating? Because that's going to be an interesting counter to watch out for if we have to see a pullback rally as well.
Absolutely right. Hiral, if you look at the structure, it yesterday it broke its crucial support, and recently we have seen a structural damage in this particular counter. 2300 was acting as a major support since a long time. In last 1 year, 2300 was never
Hmm.
breached, and for the first time in this week, we have seen that particular levels broke on the lower side. So the structure from trading point of view looks slightly on a weaker side. It may test 2200 going forward, but again, as I mentioned, these are the counters needs to be added on declines if the view is slightly from a medium to long term perspective. So 2180 is the next immediate support. That should be the stop loss for the long position if somebody is looking to hold for slightly longer term time frame. And from trading point of view, we might see a pullback, but that pullback may get sold into unless and until it reclaims 2300 levels on the high side.
Right. So overall, I think it's going to be an interesting day of trade, Nilesh, taking into consideration what's happening in the global markets, the expectation of a pullback rally, which may not be sustainable, but it could be short-lived, and what are the counters that will actually be participating in this as well. So expiry close is going to be interesting today overall. Thank you so much for joining us on the show and giving us those details. Looking forward to the day today. Thank you and stay safe.
Thank you.